What would be a good time to enter the Ethereum moving average long short vault? Might it be too risky right now? Yes, this is a very good question. This is actually something that I have prepared, not just for Ethereum, but in general, right? The fundamental problem that we currently face is that we time the market, right? Or I time the market based on the momentum, based on the trend. And the moving average is a pretty good measure to figure out where currently the trend is. And if the price is below the moving average, we tend to trend down. If the price is above the moving average, we tend to trend up. We can do back tests, what kind of moving average works the best. The problem is if we are too far away from the moving average and we are let's say now we are below the moving average, we are bearish, we rather bet on falling prices. But when we are too far away from that moving average, maybe it might be risky, right? Because we could be rallying short term, still stay below the moving average, but maybe short term is not the best entrance. And so let's have a look at that data. So over here, right? So this is Bitcoin with the best moving averages. So in orange, we've got the 44-day simple moving average. In turquoise, we've got the 125-day simple moving average. And those two moving averages tell you now why we have been betting on falling prices, right? We are below that moving average. And the reason why we take those two is because of the back test, right? We've back tested all the moving averages to up to the 200-day. The 44-day works good on the short term. The 125-day works good on the long term. Buying and holding Bitcoin during the same time period is here, this line in black. So we can tell that this is not just overfitting, right? So I got a comment on the last video where I discussed the strategy that this is just overfitting. You're just cherry picking the data, but really it doesn't even matter that much what moving average duration you use to follow the strategy. Those two have been the best, right? The 44 and the 125-day. But even if you used another one, you'd still be doing better than just buying and holding. And so the idea is just, right, we go long when we are above, we go short and bet on falling prices when we are below. And so the fundamental problem, and that's here the question that was asked, right? Are we potentially now too low? Does it still make sense to enter those trend followers? The fundamental problem is that we are bearish. We would be betting on falling prices, but we would still be bearish even if Bitcoin was to rally now by, say, 30%. Right? We could go back to $84,000 and still be below both moving averages. We'd still be bearish. And since we are currently betting on falling prices, that's the potential risk. Right? It's very comparable to, let's say, COVID. So let's see where we find COVID. Right? We crashed quickly during COVID by many percent. And we had a lot of extension from the moving average. And so then entering over here into a trend follower where we now bet on falling prices just to see the price then recover and then getting wrecked. That's not great. And so what can we do here? I think it makes sense to just look at history, right? How much did we historically extend from those moving averages? What we see here at the top, let's see, that's the 44-day moving average extension. So that's now the extension from the orange line. So when we look at how does this develop over time, where are we currently? This year is the COVID crash. This year is the final capitulation in 2018, right? We went from 20K to 3.5K. Then over here, we've got the first sell-off event during the bull market of 2021. Here we had the FTX collapse. And now we are very close to the levels of FTX and the turnaround from the bull. So it seems like it's very likely that we have finished this bull market. The sell-off is strong enough, and it seems to be comparable to the sell-off in May of 2021, that this positive momentum, right, where we went from 16K all the way to 125K, has now clearly been broken. Yeah, that's the issue. Could we potentially go above the moving average? Could we see a relief rally similar to Q3 of 2021? Possible, right? Nothing is out of the question. Everything is possible in crypto. But yeah, the positive momentum for the bull market seems to be very clearly broken. Are we very much extended from the moving average? We are. Have we seen stronger extensions? We have seen that as well. So we could potentially sell off a bit more, right? We are still at 60 something K. We are not yet at 50 or at 40K. There is more room to fall in case this accelerates, in case more liquidations occur, right? In case more stop losses get triggered. If we do see that, right? If we suddenly do fall to 55, maybe even 50K, maybe below 50K, over the next hours, then I will definitely buy the bottom. I will do some speculative purchases, not on the basis of moving averages, right? I will just do a very short-term trade, similar to what I did during COVID. If we accelerate in the sell-off, this is forced selling. This is a liquidity crunch. If we do not accelerate in the sell-off and we just stay at the current levels, we're probably going to stay there for a while. We're not going to see a V-shaped recovery. That's at least how I interpret history. So yeah, if we do see more sell-off, a good time to buy. Right now, it's a bit early in my opinion. But yeah, we are currently making money with all of this, right? So it's just following the trends. We are now close to $1 million in profit with this recent short. And it's just based on that data. It's just based on, if you use the 125-day simple moving average without leverage, you're seeing this outperformance versus buying and holding. If you add some leverage to that, which we do in the vault, then the outperformance looks even better. So that's fundamentally what we're doing. The 200-week moving average still slightly outperforms buying and holding, but not by much. Right? We're just too slow with reacting to the movements.